Nike is implementing an interesting strategy shift. It's one that I didn't expect from this iconic brand. I wanted to evaluate the details of this latest shift, what it could mean for Nike stock investors, and understand when this company will return to the growth rates it's used to over the previous 10 years, 20 years, and 30-year time periods. Nike stock investors are not used to the company reporting negative year-over-year growth. So this is an interesting time for Nike. Let's take a look at what Nike is doing to try and turn things around. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Nike's saying that we have been intentionally reducing the proportion of our business driven by our classic footwear franchises. Things like Air Force One, Air Jordan 1, and Dunk. These have been highly popular brands, and Nike's really been saturating those brands, really pushing the envelope on releasing new styles related to these brands, new colors, high top, low top, etc., really saturating the market and reducing the scarcity factor in these franchises. This reminds me of a couple of years ago, Disney felt a similar pressure point when they oversaturated the market for Marvel, right? For a while, they were launching every other movie in the theater was a Marvel movie. They were saturating that brand, creating new shows based on Marvel-themed characters, and they oversaturated that market. And so now they've stepped back a little bit, and the new CEO said that or I shouldn't say new CEO, but Disney's returning CEO said that they want to focus more on quality and less on quantity of that brand. Nike doing something similar here and reducing intentionally the proportion of their business driven by these popular brands. And so Nike revenue in the first quarter from these franchises declined more than the total business as they tightened marketplace supply. And worse yet, they expect this trend to continue tempering their reported revenue over the coming seasons. So they intentionally did this, and they knew that it was going to cause revenue to decrease, but they did it anyways. An interesting strategy here. But what this will do is, in the long run, it'll increase the scarcity value of these brands. And when they launch these franchises again in the future, they can generate more buzz, they can generate more sales, and they can generate higher average selling prices when they do launch these products again in the future, because there will be more scarcity. Consumers will be looking for them, waiting for them, putting them on their waiting list. When they do come out, they'll go out in a rush and buy them. At least that's the hope from Nike management. So they say they are actively rebalancing product allocations to their highest traffic channel in order to maximize franchise health and full price realization. Now, this is an interesting statement here, and it kind of alludes to something that I've been looking for from Nike, although not directly alluding to it. And that's been Nike's strategy, where they were de-emphasizing wholesalers. So they were sending less inventory to partners like Foot Locker and Macy's and Warehouse Shoe Sale, etc., to focus more on Nike Direct, sending more of that inventory to Nike website, Nike app, Nike stores, because that drives higher profit margins. If you're not selling to wholesalers, you're generating a higher average selling price, and of course that means higher profit margins. And I was expecting Nike to reverse that strategy, because it doesn't seem like it worked. It seems like it backfired. It seems like it created an opening for competitors to call up those partners, previous partners of Nike, and say, look, Nike's not sending you as much inventory. You have more shelf space. Would you be interested in buying our products and putting those on your shelf? And the partners like Foot Locker said, yes, we would be interested, because we need to fill this shelf space. We don't have our own branded products, so we need to partner with big brands. And since Nike is not capitalizing, we can give you the shelf space. And that seems like what's happened over the last year and a half or 2 years for Nike. is as they stepped back from those wholesalers, it created an opening for competitors to step in and take up that shelf space, and that's been working for them. And so I was expecting Nike to more directly allude to that and take a more direct approach to countering that. And this might be something, right? Rebalancing product allocations to their highest traffic channel. So maybe this could mean that they're going to send more inventory to wholesalers, although that's not a direct answer to that question that I'm sure many investors like myself have of Nike. So taken all together, these trends and strategies drove a mid-single-digit headwind on Nike's first quarter revenue. And as you know, Nike's first quarter revenue was down significantly year over year, roughly 10% year over year. So roughly half of that was due to Nike's decisions about product placement and product supply. And so now they say that as we look ahead, we are working to position new products in the path of the consumer. What's coming in the fall of 2025, deepening Nike's confidence in their accelerated pace of innovation to build a more compelling future product pipeline. Progress with partners will be accelerated with new brand momentum and creating new energy with consumers, but it's going to take time to regain and expand their market share. And this is reflected in their spring 2025 order books, which came in roughly flat versus prior year, and that was a little lighter than Nike had planned. So a lot to digest here in these statements. Let me take them one at a time, starting with what's coming in the fall of 2025. So this was the theme of Nike's latest earnings call, is that they are pulling back from traditionally popular brands and focusing more on new product pipeline, new innovations, putting new products in front of consumers and not relying on those older franchises to drive continued success. And they're confident that these new products are creating enthusiasm from Nike partners like those that I just talked about, the wholesalers, because they're excited about the traffic that's going to bring from customers who are looking for these new products, right? They're going to call in and ask, or they're going to come in and look to see if you have those latest Nike shoes, if you have those latest Nike trends. But that's going to take time to expand its market share. It's not going to happen right away. This is, something that Nike's going to focus on, and that means growing investment in research and development for new products. And it's going to take time for that investment in research and development to result in more products. And then they have to market and advertise those products. And that's going to take time to all filter its way through the system to create this urgency from customers to go in and look for those products, to go in and buy those products. And so that's what Nike alludes to here in the last sentence, where they say their 2025 order books were not that exciting. They were flat. They were expecting better than that. They were expecting more orders, but they didn't get that yet. And so it's going to take time for all of that work to filter its way through the system and result in a invigoration of the Nike brand, invigoration in the revenue, and invigoration in the revenue growth. And you can understand, following these earnings results, Nike's stock price fell as a result. Investors were not happy that Nike's taking this step. Investors were taking the approach, fine, you're going to make this big shift. We'll just wait and see. We'll wait for evidence that suggests this new strategy is working before we just say, oh, it's a new strategy. We automatically feel that it's going to work, and so we'll believe and we'll invest. That's not the approach investors took following these announcements. Investors took a skeptical view of these changes, and Nike needs to demonstrate it's working before investors will step back in and say, okay, we're confident again in Nike stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.